If you've spent any time in precious metals communities over the past few years, you've heard the same claim over and over. There's a massive silver shortage. The supply is running out. Prices have to explode. In 2024 alone, I've seen headlines claiming everything from emergency liquidations to mints running dry to the end of silver supply as we know it. So I did what I always do. I went to the actual data. The Silver Institute reports, USGS mining statistics, COMEX inventory numbers, refinery production figures. And what I found is a lot more nuanced than either the bulls or the bears want you to believe. Today, we're going through the real 2024 data on silver supply and demand. No hype, no fear-mongering, just the numbers and what they actually tell us. Introduction. I'm Alex Morgan, and on this channel we cut through the noise in financial markets by going straight to the data. No affiliate links, no products to sell, just honest analysis. Quick disclaimer, this is educational content, not investment advice. I'm not telling you what to buy or sell. I'm showing you how to read the data so you can make your own informed decisions. Here's what we're covering. First, what the actual production numbers show for 2024. Second, where demand is really coming from and what's changed. Third, the inventory situation at refineries and exchanges. Fourth, what premiums over spot price tell us about physical availability. And finally, whether the term shortage even applies to what's happening. Let's start with the supply side. Part 1. The production reality. When people talk about a silver shortage, they usually start with mine production. So let's look at what's actually happening in 2024. According to the US Geological Survey's preliminary data, global silver mine production in 2024 is estimated at approximately 830 million ounces. That's actually up slightly from 2023's 820 million ounces. Now, before the comment section explodes, let me be clear. I'm not saying everything is fine and there are no supply concerns. I'm saying mine production hasn't collapsed. It's relatively stable, which is important context. Here's what is happening on the production side. First, several major mines have faced temporary disruptions. Peru, which produces about 17% of global silver, had labor strikes at 2 significant operations in early 2024. Mexico, the world's largest silver producer at about 23% of global output, dealt with power supply issues at some facilities. These disruptions matter, but they're temporary operational issues, not a fundamental exhaustion of silver reserves. Second, and this is crucial, remember that about 70% of silver comes as a byproduct of mining other metals. So silver production is largely tied to copper, zinc, and lead mining economics. In 2024, copper prices have been strong due to electrification demand. That means copper mines are running full capacity, which means they're also producing their byproduct silver. This actually supports silver supply even when silver prices alone wouldn't justify new mining projects. The third factor, recycling. In 2024, recycled silver is estimated at around 170-180 million ounces. This is actually down from the peak we saw in 2020-2021 when high prices drove more recycling. Why? Because silver prices in 2024 have been range-bound between 23 to 32s, which isn't high enough to motivate massive recycling from industrial scrap or old jewelry. So total supply, mining plus recycling, is roughly 1 billion ounces for 2024. That's our starting point. Now let's talk about who's buying. Part 2, demand breakdown. This is where things get interesting because demand has genuinely surged in specific sectors. The Silver Institute's 2024 report breaks down demand like this. Industrial demand, approximately 570 million ounces. This is the big story. Within industrial, solar panel manufacturing consumed an estimated 170 million ounces in 2024. That's up from 140 million in 2023. Why? Because solar installation capacity is growing globally, driven by climate policies and falling installation costs. Each panel still needs about 0.6 to 0.7 ounces of silver for the electrical contacts. Now here's the nuance everyone misses. Yes, total solar demand is growing, but the amount of silver per panel is actually declining due to thrifting technology. Some manufacturers have reduced silver content by 15-20% per panel. So solar demand is growing, but not as explosively as the number of panels installed would suggest. Electronics and other industrial uses, about 240 million ounces. This is relatively stable, growing slowly with global GDP. Investment demand. This is where things got wild in 2024. Physical investment, bars and coins, surged to approximately 280 million ounces. That's up significantly from 2023's 200 million ounces. Why the spike? Several factors. Geopolitical tensions increased in early 2024. Inflation remained persistent, and there was a wave of retail investor interest driven by social media narratives about shortages and price manipulation. ETF demand was more mixed. Some silver ETFs saw inflows, others saw outflows. Net effect was roughly flat to slightly positive, adding maybe 20 to 30 million ounces of demand. Jewelry and silverware, about 180, 190 million ounces, relatively stable. Add it all up. Total demand in 2024 is approximately 1.05 to 1.1 billion ounces. So we have supply around 1 billion ounces and demand around 1.05, 1.1 billion ounces. That's a deficit of 50, 100 million ounces. Does that mean shortage? Hold that thought. Part 3, the inventory situation. Here's where we need to distinguish between a deficit and a shortage. They're not the same thing. A deficit means annual production doesn't meet annual consumption. A shortage means you can't get the product even if you want to pay for it. Let's look at inventories. COMEX warehouse stocks as of late 2024 show approximately 280, 300 million ounces in total inventory. That's split between registered, available for delivery against futures contracts, and eligible, stored but not available for immediate delivery. The registered category has fluctuated a lot in 2024, dropping from about 80 million ounces in January to as low as 50 million in the summer, then recovering to around 65, 70 million by year end. Does this mean COMEX is running out of silver? Not exactly. Eligible silver can become registered if owners choose to make it available. And remember, most COMEX contracts settle in cash, not physical delivery. Only about 1 to 3% of contracts actually demand delivery. What about mints and refineries? This is where things got real in 2024. Several national mints reported delays in allocation systems for retail products. The U.S. Mint had periods where American Silver Eagle production couldn't keep up with demand. The Royal Canadian Mint experienced similar issues. But here's the key distinction. These were manufacturing bottlenecks, not a lack of raw silver. Mints have limited capacity to turn raw silver into finished coins. When retail demand spikes, they can't instantly scale up production. It's like a restaurant running out of menu items on a busy night. It doesn't mean food doesn't exist, it means the kitchen can't keep up with orders. Industrial users, the companies making solar panels and electronics, did not report inability to source silver. Why? Because they buy raw silver in large quantities directly from refineries or through long-term contracts. The bottleneck was in retail investment products, not industrial supply. This is a crucial distinction that gets lost in the shortage narrative. Part 4. What premiums tell us. If there's a real physical shortage of something, the premium over spot price should explode and stay elevated. Let's look at what actually happened in 2024. In January 2024, premiums on American Silver Eagles were running about $4, $5 over spot. By March, during a surge in retail demand, they spiked to 7 to nearly 8 over spot. Some dealers were charging even more due to allocation constraints. But here's what happened next. By summer, as mints caught up with production and some retail investors sold back into the market, premiums dropped back to $5 to $6 over spot. By year end, they were around $4 or $5 again. For generic silver rounds and bars, premiums followed a similar pattern but were lower, ranging from $2 to $3 over spot most of the year, spiking to $4 or $5 during peak demand periods. Compare this to 2020-2021, when premiums hit 10 pluses over spot and stayed there for months. That was a more sustained supply-demand imbalance. 2024's premium spikes were shorter and less extreme. What about international markets? In India, a major silver consumer, premiums stayed relatively modest. In China, where industrial demand is huge, there were no reports of factories unable to source silver. London's over-the-counter market, which handles massive wholesale transactions, functioned normally throughout the year. This tells us the tightness was concentrated in retail investment products in specific markets, not across the entire global silver supply chain. Part 5. So is there a shortage? Here's my honest take based on the 2024 data. There is not a shortage in the traditional sense. Silver is available. Industrial users are getting what they need. Large institutional buyers can source silver without major issues. What we have is 1. A structural deficit where annual demand exceeds annual mine production by 50 or 100 million ounces. This is real and has been happening for several years. 2. This deficit is being met by above-ground stockpiles. There are billions of ounces of silver in various forms around the world. Old jewelry, industrial inventories, government reserves, private holdings. When prices rise, some of this comes to market. 3. Bottlenecks in retail investment products. Mints have limited capacity and can't always keep up with surges in retail demand. This creates temporary tightness in coins and small bars, but it's a manufacturing constraint, not a fundamental lack of silver. 4. Growing industrial demand, particularly from solar, which is a long-term trend that could tighten markets further if mining production doesn't keep pace. The big question is, how long can deficits be sustained by above-ground stocks? Nobody knows the exact size of above-ground stockpiles. Estimates range from 2 to 3 billion ounces in various forms. If demand continues to exceed production by 50, 100 million ounces per year, theoretically those stocks could supply the deficit for 20 to 30 years. But here's the catch. Not all above-ground silver is available at current prices. Much of it is in jewelry or industrial products. It would only come to market if prices rose significantly. Say, silver hit $40, $50, or higher. At those prices, recycling would surge. So we're in this interesting dynamic where there is a supply-demand deficit, but there isn't an immediate shortage. The deficit could tighten markets over time, or higher prices could bring more supply to market, or solar thrifting could reduce industrial demand growth, or a recession could crater investment demand. It's complex, and anyone claiming certainty about what happens next is selling you something. Part 6. What the conspiracy theories get wrong. Before we wrap up, let's address some common claims. Claim, COMEX is going to default because they don't have enough silver. Reality. COMEX registered inventories have been lower than current levels before and didn't default. Most contracts settle in cash, and eligible stocks can become registered. A default is possible in theory, but not indicated by current data. Claim, mints running out of coins proves there's no silver left. Reality. Mints running low on finished products proves high retail demand and limited manufacturing capacity. It doesn't prove lack of raw silver. Industrial users aren't having trouble sourcing material. Claim, banks are suppressing silver prices through naked short selling. Reality. Large banks have been fined for manipulation in the past, so illegal activity has occurred. But current market function suggests price discovery is happening. When physical demand is genuinely high, premiums rise. The market isn't perfectly efficient, but it's not completely broken either. Claim, solar demand alone will cause silver to hit $100. Reality. Solar demand is growing, but so is thrifting technology to reduce silver content per panel. And if silver hit $100, recycling would explode, bringing more supply to market. Markets are dynamic, not one-way streets. The truth is almost always more nuanced than the extreme claims on either side. Conclusion. So what does the 2024 data actually show? Silver supply from mining and recycling, roughly 1 billion ounces. Total demand from all sources, roughly 1.05 to 1.1 billion ounces. That's a deficit, which is real and matters over time. But inventories exist, retail bottlenecks don't equal industrial shortages, and premiums have fluctuated but not exploded permanently. Is silver undervalued? Maybe. The deficit suggests tightening could drive prices higher over time. Is silver going to $100 next month? No credible data supports that kind of move without a major catalyst. Could supply issues get worse? Absolutely. If mine production drops, solar demand accelerates faster than thrifting improves, and investment demand stays high, markets could tighten significantly. Could the deficit reverse? Also possible. A recession could crush industrial and investment demand. Higher prices could bring recycling supply flooding back. What I can tell you, make decisions based on data, not narratives. Understand the difference between deficits and shortages. Recognize that markets are complex and unpredictable. If you found this useful, hit the like button. Subscribe for more data-driven analysis without the hype. And drop a comment. What other precious metals topics do you want me to break down? Gold mining economics? Platinum supply dynamics? Let me know. Thanks for watching. Stay curious, stay skeptical, and I'll see you in the next one.